Banks, iron ore miners and energy companies lead a sell-off on the ASX as the global economy hits local investors. The near $6 billion Snowy Hydro project hits soft ground, and the godfather of AI quits his job at Google, worried that the growth of artificial intelligence could lead to killer robots that are smarter than humans. It's Thursday, the 4th of May, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. We've got killer robots in the show today.
How about that for a headline, Sean? Killer robots that are smarter than humans. I will be sticking around for that story.
Absolutely.
Something else I'll be sticking around for is your chat after the show with Chris Sheehan, the Executive Group Investigations and Fraud at NAB, and also a 27-year veteran of the AFP. So he knows this space particularly well.
Yeah, so I think Chris is more of an AFP, an Australian Federal Police person, than your traditional banker, shall I say. Very frank, very upfront, very easy to chat to, all about scams, what's prevalent now, what you should do about them if you receive a call or an email or a text or something, and of course what the banks are doing about it. It's a great chat, lovely fellow Chris, and he just kind of brings, an earthiness to it. Well, clearly knows his stuff, but there's no highfalutin banking in this conversation.
No highfalutin banking in this conversation. We go from killer robots to highfalutin banking.
It's going to be a long show.
And we've barely even started, Sean. So it is a ripper of an interview, though, so it's well worth a listen a little bit later on. But the main story this morning, Sean, the major banks, the big miners and energy stocks have led a slump on the local share market as fears around global economic growth and the state of the banking sector in the US really start to impact Australian companies.
The S&P ASX 200 has fallen sharply over the past couple of sessions, including a 1% drop yesterday to be trading at its lowest point since late March. It closed at 7,197 points. The ASX is very heavy three sectors: banking, iron ore, and energy. In fact, 8 of the top 10 companies come from those sectors. And they're the areas where there's been bad news in recent days. As a result, the local bourse has headed south, and that's not good news for investors.
All right, well, maybe let's take it sector by sector then. The major banks were sold off after investors in global banking stocks became very nervous about the outlook for financial firms in the US.
Commonwealth Bank, National Australia Bank, Westpac and ANZ all closed down between 1.5% and 2% yesterday. Now, that's 24 hours after the Reserve Bank lifted the benchmark interest rate, which should actually be good for big lenders' profit margins. Macquarie Group also came off, finishing down 1.3%. It all followed a sell-off in US regional lenders, with the share prices of some large banks falling 15%. There are fears about the financial stability of the world's largest economy. Now, not helping is a warning from Treasury Secretary Janet Yellen that the government could run into debt ceiling problems in the next 4 weeks. The global banking system is linked, so basically a sneeze on Wall Street can cause a local bank to catch a cold. Investors are very worried about that.
And so then what's happening to the energy companies? Why are their share prices falling?
That's all about oil prices at the moment. Brent prices fell the most in 4 months on the back of gloomy reports about the global economy. That was yesterday morning. Weak US jobs data and Chinese manufacturing figures sent Brent crude down to under $76 a barrel. Of course, that's good news for those buying petrol, but bad news for investors in some of the local stocks. They were hit hard yesterday. Beach Energy and Ampol were off more than 3%. Woodside Energy and Santos were both off around 2.5%.
And the big miners, the iron ore plays?
Well, that story is all about China. Earlier in the week, figures showed that factory output in the world's second largest economy was shrinking. Not good news for Australia, which exports tens of billions of dollars of iron ore to China each year. Fortescue Metals Group's share price yesterday dropped 4%. Rio Tinto was off 2.5%. BHP was down almost 1%. It was a bit of a shocker.
Sean, really, apart from that one little bit of good news there about petrol prices that you mentioned, it's all pretty gloomy. Is there any good news anywhere that you can kind of share with us?
There's always a silver lining, or perhaps a golden one. When times are tough, investors go to less risky assets. And of course, that's gold. So it's trading above $2,000 an ounce. That's helping the gold diggers. Newcrest Mining, which of course is under takeover offer, it was up 2% yesterday. Number 2 gold miner, Northern Star Resources, was also more than 2% higher. Gold miners, there's your silver lining.
Yeah, okay, I'll allow that. That was kind of well done. It's a fairly comprehensive wrap of everything that's happening on local markets. Is there anything else that we need to know from the ASX yesterday?
A few stories later in this show, a couple of company announcements which are certainly worth mentioning. Residential property developer AV Jennings said challenging trading conditions resulted in the company suffering a 50% drop in third quarter sales. That was a little over 100 sales. That wasn't as bad as some had expected. Its share price actually rose more than 3% yesterday. Ramsay Health Care reported an 11% jump in revenue for the 9 months to the end of March. Investors weren't impressed. Its share price tumbled 5%. Otherwise, I think we've pretty much covered the main points.
And what's going on in international markets?
I mentioned oil and gold prices. The Aussie dollar has held on to yesterday's gains. It's trading around 66.7 US cents. Cryptocurrencies have had a bit of a run in recent days. Bitcoin's at around 28,500 US dollars a unit. And that's about it, Michael.
All right, there's plenty happening though, Sean. We'll be back in a moment with the rest of the day's business news. Sean, the massive Snowy Hydro pumped storage project will overrun its budget and may not be fully online until the end of the decade, raising fears about the reliability of the East Coast electricity grid.
The $5.9 billion project could be delayed by up to 2 years, and the federal government-owned company is working to reset the timetable and budget. Now, in a statement yesterday, Snowy Hydro said the reset will ensure the critically important clean energy infrastructure project is placed on a robust and sustainable footing. You'd hope so for a clean energy project. It expects to have more details on costings by about July this year, but the first power won't be pumped until the second half of 2028. Now, there are 3 main reasons for the delay. COVID has hurt resourcing, number 1. Number 2, supply chain disruptions. And number 3, I particularly like this one, what they call difficult geological conditions have slowed tunnelling. Now, remember Florence? That's the 2,000-tonne boring machine.
Yeah. Can you imagine having a boring machine named after you? It doesn't feel like much of an honour, does it?
You've got a big 2,000-tonne boring machine named after you.
Not just the size of it, the fact that, in fact, it's a boring machine. They could call it a drill.
In any case, it's not doing much because it's stuck in soft ground and has been for months. Even worse, so it's 30 metres underground. Above it, at land level, a big depression has appeared. So what they're calling difficult geological conditions is basically a massive boring machine that is stuck in the mud, literally, and a big depression above it. Not good. Anyway, the delay means the full 2,000 megawatts of pumped hydro capacity of Snowy 2.0 will be available more than 4 years after the next large coal-fired power station in New South Wales, Araring, is due to close. Now, that's due to close in August 2025. The new Premier of New South Wales, Chris Minns, has been talking about doing some deal to keep it open just to keep the lights on. I mean, in fact, literally to keep the lights on.
Now, this next one, Sean, I think this is pretty remarkable. Full battery electric vehicles made up 8% of sales of new vehicles last month. That's up from 1.1% just 12 months ago.
And Tesla now has 2 vehicles in the top 10 sellers. If you include hybrids, almost 1 in 6 vehicles sold last month are electrified, including 5 of the top 10 models. Overall, sales of new vehicles were up just over 1% in April, according to the Federal Chamber of Automotive Industries, with the Ford Ranger Ute taking the number 1 spot off Toyota Hilux. Now, the Toyota RAV4 came in at 3, followed by the Tesla Model Y. The Tesla Model 3 came in at 10. That's the 2 that made the top 10 from Tesla. Toyota, Mazda, Kia, Hyundai and Ford are the top-selling manufacturers in that order. Tesla's number 8, while sales of BYD vehicles, that's the Chinese electric vehicle manufacturer, are growing very fast.
Now, Sean, the day after the Reserve Bank's latest interest rate rise, the central bank was copping plenty of criticism for lifting the benchmark rate by 25 basis points.
None more than from Victorian Premier Daniel Andrews. He said the Reserve Bank was smashing the place. Smashing the place. He doesn't think it's necessarily going to work to smash inflation, but it is working to smash families. Not sure where he got his economics information from on that one, Daniel Andrews. Anyway, he reckons that the Reserve Bank is smashing families. Federal Treasurer Jim Chalmers was somewhat more sanguine, saying that the rate rise is a timely reminder that inflation remains the key economic challenge.
Is it normal for rate rises to be quite so political? I know it's often an issue in election campaigns, that it comes down to kind of then questions over cost of living, et cetera, and economic management. But this feels very, very political at the moment, and not just about kind of the government's ability to manage the economy, but really directed straight at the Reserve Bank.
I think because the cost of living has risen so much, not just around interest rates, but, energy prices, inflation, all that sort of thing, it's hip pocket really matters. And I think people are thinking about it more. And so politicians are jumping on the bandwagon and saying, hey, the cost of living crisis is real. The Reserve Bank shouldn't be lifting interest rates. The Reserve Bank itself is apolitical. It has lifted rates during election campaigns previously. I remember one of the former Reserve Bank governors famously saying, well, if we didn't do it, then we'd be political, which is true. Like they just have to make a decision and go with it. But I just think at the moment it's easy to kick the Reserve Bank.
And speaking of the Reserve Bank, Governor Philip Lowe has also given a speech warning that Australia needs to improve productivity in order to bring down inflation.
That's right. Labour productivity, which is basically output produced per hour of work, is the same as it was 3 years ago. If it doesn't improve, Lowe says, it will be hard to get inflation back to the Reserve Bank's target of 2 to 3%. Now, inflation is currently running around 7%. If you can increase output with the same level of inputs, there's basically more to go around, and that takes the heat out of price rises. It is the best way to improve living standards. Now, Lowe also said Tuesday's decision to lift rates was, as he put it, finely balanced.
Retail sales jumped more than expected in March, but overall turnover for the first quarter of 2023 will detract from economic growth.
Retail spending was flat over the 3 months to March, which is well below last year and lower than the long-run average. The Australian Bureau of Statistics data shows that consumers are spending more on services and proportionately less on goods. Now, that's exactly what the Reserve Bank Governor Philip Lowe said he was worried about on Tuesday. Eating out spending was strong in March, up 1.5% over the month, and food spending was also 1% higher. Part of that was higher food costs. But I thought it was quite interesting. It was also partly due to the footy seasons, AFL, NRL, rugby, football, etc., starting up again. Or, as the Bureau of Statistics put it, strong demand driven by the continued return of large-scale cultural and sporting events. Presumably, Michael, we're talking hot dogs, meat pies here.
Oh, yes. Isn't it funny that the ABS can suck the fun out of something even as entertaining as sport? The continued return of large-scale cultural and sporting events. Way to make it sound particularly boring.
Yeah, people are eating more meat pies, more hot dogs, things like that.
And so they should, Sean.
Yeah.
Now, on this same topic, Sean, not, I suppose, sporting events, but the topic of spending, highlighting the slowdown in retail spending yesterday was Amcor boss Ron Delia. He said that consumer spending is winding back, resulting in an earnings downgrade for the packaging giant and a 9.5% drop in the company's share price.
Do you know that Amcor is the largest consumer packaging company in the world?
I didn't know that.
Isn't that quite amazing? It's like, I think it's got 220 factories, 43 countries, makes bottles and plastic pouches, wrappers, food containers, food, beverage, particularly healthcare as well. I just think it's amazing. It was listed, it still is listed on the ASX, so its primary listing is now on the New York Stock Exchange. It is an Australian company. I just think it's an amazing little story.
I know I use this word semi-regularly, which helps it, which kind of means it loses effect a little bit, but I'm gobsmacked by that. 220 factories.
Yeah. Packaging.
And it's a good old Australian company that's done well. Good on you, Amcor.
Yeah. Basically, the cumulative effect of price rises across the global economy is slowing spending, Delia said. People are trading down. They're looking for more value-oriented options. I loved his example. People are like buying a case of soft drinks rather than a single bottle at a convenience store. Excellent example. Anyway, it just means that Amcor's earnings aren't going to be what they thought they would be.
Oh, there you go. Another one, Sean, JB Hi-Fi is also finding it a bit tough at the moment, warning of slowing sales as consumers pull back their spending.
Yes, so sales momentum has continued to moderate. So the electronics retailer is still growing turnover, but at a much, much slower pace. At its subsidiary, The Good Guys, which specialises in white goods, sales actually went backwards. Total sales for the group were up 0.8%, but same-store sales, which is a much better comparison, same-store sales as last year, they were actually slightly lower.
And one more, Sean, before we get to international news. The Northern Territory government will allow fracking in the Beetaloo Basin, paving the way for the development of a world-class gas resource. Very serious story, this one, but Beetaloo is a fun word to say, isn't it?
I thought you were going to be serious on this. So, the Northern Territory needs the resources, needs the money. No, Beetaloo.
Apparently it's the name of a big pastoral station up there, after which it's named.
Oh, is that right? I didn't know that.
Yeah.
So, the Northern Territory government seemed to be quite happy, so did the gas miners. The environmental groups aren't so happy, not surprising. The Chief Minister of the Northern Territory, Natasha Files, released the final implementation report into the scientific inquiry into hydraulic fracturing, which took 5 years' work. Given the name, it probably deserves the 5-year time span. It builds on a scientific inquiry held in 2018, which concluded that risks posed by the energy industry in the Beetaloo Basin could be managed if its 135 recommendations were implemented. Yep, 135 recommendations. Ms. File said the government would deliver tough and uncompromising new measures that will create a sustainable environment and also commit $2 million a year for the government's Petroleum Operations Unit to ensure those standards are met.
That is actually a big story. I feel I may have trivialised it a little bit.
Surely not.
No, never. I would never do that. International news now, Sean, and the Indonesian government is considering a tourist tax of up to $100 for visitors to Bali to really deter unwanted guests to the island. What's classed as an unwanted guest if you're talking about tourists?
I mean, most people who go to Indonesia for a holiday go to Bali. And at the moment, it's being overcrowded with not just short-term tourists, but plenty of long stayers trying to escape home nations, particularly Europe and the war in Europe. Now, Malaysia accounts for the largest number of tourists, 368,000 in the first quarter of this year. Singapore's next, and then Australia, about 280,000 tourists in the March quarter. There's been a big jump in deportations this year, demonstrating the behaviour of some of these tourists. 6 Australians have been deported, though Russia, or Russian nationals at least, are the main offenders. 27 Russian nationals have been deported, mostly for failing to respect local customs. Now the government is talking about the new tax to improve the type of person visiting Bali. Funny thing, I'm not sure about the Russians, but when it comes to the Australians, it might actually work.
Yeah, I suspect it probably will. Now, a Russian spy network has acquired sensitive technology from European Union companies to fuel Vladimir Putin's war on Ukraine, even after a US-led crackdown on the covert smuggling ring.
The network, set up to procure goods ranging from microchips to ammunition, has managed to obtain machine tools from Germany and Finland despite US sanctions, according to a Financial Times investigation. The procurement cell's ability to operate in Europe demonstrates the really big challenges faced by Western governments as they attempt to choke off the supply of critical technology for Russia's military. Obviously, if they can't choke off the supply of that technology, it just makes the job of managing Russia and kind of getting them to withdraw from Ukraine just that much harder.
Now, I don't know what to make of this last story, Sean. I feel like it's actually a little bit terrifying because a British computer scientist known as the godfather of AI has quit Google and expressed regret over parts of his life's work as he fears that the growth of artificial intelligence could actually lead to killer robots that are smarter than humans.
75-year-old Geoffrey Hinton, the head of the Google Brain Research Department, revealed his concern over the possible ultimate outcomes of his pioneering work, saying it's nearly impossible to stop bad actors from using his work for bad things, according to a report in the Telegraph of London. There's a growing chorus of people worried about AI. Last month, Sir Jeremy Fleming, the director of the GCHQ, Britain's listening post, privately warned the cabinet about the damaging potential of chatbots. Google Chief Executive Sundar Pichai recently admitted that the rapid pace of artificial development keeps him up at night and said it could be very harmful if deployed wrongly. In March, Elon Musk and other tech leaders called for a 6-month pause in AI research. It does make you worry when these people who effectively invented AI are saying things like this.
I actually think that is quite confronting. And I know that I mentioned this in the weekend edition of Fear and Greed. Or obviously, Geoffrey Hinton hadn't resigned yet, but I was talking about kind of Elon Musk's concerns and Sundar Pichai's concerns. I thought it was remarkable. Our eminent judge, our Fear and Greed colleague, Adam Lang, didn't agree with me.
Not so much.
I didn't win that category, but you know what?
Are you holding on to it or not?
No, I let things go quite quickly. But I'll tell you what I'm going to do. I'm going to hear this. That was me dusting off my argument from last weekend. I'm going to revive it on the coming weekend edition and see if I can secure a win on with a reheated story.
Oh, maybe.
I don't have much hope.
No, me neither.
No. All right. Up next is the Fear and Greed Daily interview, Sean, and you're speaking today with Chris Sheehan from NAB. He heads up their investigations and fraud unit there, and is also an AFP veteran.
That's right. All about scams, fraud in banking, what scams are most prevalent at the moment, what people should do about it, also what the banks are doing about it, and the fact that this isn't just a consumer bank problem. It also involves the big tech companies. It involves the telcos. Great chat. Yeah, it's a really good one. It's coming up next in the Fear and Greed playlist, Sean, on your podcast platform or at fearandgreed.com.au. And you know what yesterday was, and I completely forgot to mention it. Wednesday, of course. Yes. It's Wednesday. New episode of How Do They Afford That came out yesterday, which is our sister podcast that we do with Canna Campbell, the founder of Sugar Mama TV, about making your money work a bit harder for you. And I completely forgot to mention it. And so that was a bit of an oversight on my behalf. And so I'm going to mention it now. The new episode that's out, it's about insurance, actually. It's about kind of income protection insurance and a few other bits and pieces. It's really about this idea of protecting your wealth through insurance and how basically easy it is in order to do that. And the idea that it's too late to get insurance when you need it. Yeah. You need to be thinking about it when you don't. And so it's kind of the pros and cons and various elements of it. It is definitely worth a listen. And I should have mentioned it yesterday. I'm 24 hours late, so please forgive me, Sean. Well, as a result, I haven't heard it yet, and I'm 24 hours late, so I'm going to listen to it today. Excellent. Thank you. Thank you very much, Sean. Thank you, Michael. It's Thursday, the 4th of May, 2023, Star Wars Day. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook, and stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. You can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.